Good morning, everyone. My name is Wayne Hiller van Rensburg. I'm here to moderate our session this morning. I'd like to introduce the IRFA President, Enos Ngutshane, who will start the proceedings for us. Enos, over to you. I hope you can hear me.
Yes, I can hear you.
Thank you. We can hear you perfectly. Thanks, Enos.
Thank you very much, Wayne, for those opening words for our webinar this morning. As you can see, we've got the agenda today where we're going to be introducing the webinar, looking at the FSCA Information Request number 2 of 2020, followed by a question and answer session. Item 4 is creating direct relief for members. And item 5, we will close the session. And thank you very much for your participation. Participants, as a way of welcoming you and taking you through the introduction, the COVID-19 pandemic is a new territory for all of us. And as you know, we are going through these challenges and also learning to really address ourselves and take care of our safety through this process. I'd like to take you through the actions that have been taken by the Institute of Retirement Funds Africa. These are on the 30th of April 2020, our EXCO proposed a creation of a COVID-19 work group as an ad hoc committee. This committee was recommended to the board, and the board accepted our recommendation as EXCO. Therefore, the work group itself will continue working throughout the pandemic itself, and the board ratified the recommendation of the creation of this work group on the 15th of May 2020. On the 8th of May, we wrote to the FSCA and requested clarity on whether funds can rely on unregistered rules where rule amendments were required due to changes to contributions. I must state that FSCA has acknowledged our letters, and we are currently awaiting a feedback from their side. On the 11th of May, together with our sister organization, BATSITA, we wrote to the FSCA requesting a waiver of fees for rule amendment that relates to COVID-19 pandemic, as well as levies payable by retirement funds. FSCA has acknowledged our letter as well, and we are still awaiting a final feedback from their side. Of course, these are ongoing engagements with our regulators and also with our members in order to be able to develop actions that need to be taken to facilitate the process going forward. Thank you.
Thank you. Thank you, Enos. We're now going to proceed to the next portion of the presentation related to the information request. Our two speakers there will be Geraldine Fowler and Fiona Rollason. I just want to ask them to join us on screen. Good morning.
Morning, Wayne.
Morning.
Morning, Enos. Morning, Fiona.
Morning, Fiona.
Morning to everyone, all the, what do we call ourselves? Webinarists that has joined the IRF this morning. It's Thank you. It's very exciting to see so many participants. You happy for me to kick off, Wayne?
Please do. I'm not going to read the questions. I mean, they're on screen, and I think they're more guidance. Please, can you assist us and just take us through what is required? There's this information request, and I think for many of us, the question is, who needs to do it? What do we need to do? Yes, and we're looking for guidance. Can you?
Perfect. I will do so. Yes, I must say that there seems to be so many requests and circulars and information, guidance, notes, not just coming through from the regulator, but you know, as we know, this is COVID-19 is a new event, not just for us in South Africa, but worldwide. And there's just so many pieces of information and notes flying around and coming about that it is becoming quite daunting keeping up with everything. And I think that is part of why IRFA wanted to just address the latest one, which is the FSCA Information Request 2 of 2020. And this is a request that's been issued by FSCA on the 15th of May. And it is a request for information on the impact of COVID-19 pandemic on the contributions for retirement fund savings. So this is, and the request is issued to funds, and the funds have to provide FSCA with certain information. We're going to look at some of that in more detail now. So I think often when these type of requests go out, everyone assumes the administrator is going to complete these, receive it, so they must complete it. But I think it's important for fund trustees, principal officers, to understand that the request for information is actually issued and the fund must provide the information. So perhaps I think one of the important notes that I want to stress is that the fund's principal officers and the boards of trustees must take responsibility for this request and ensure that the service providers actually provide them with the information, or then complete the template for the information on their behalf, and the board must then sign off this request for information. But if so just to look a little bit at what FSCA is asking for and the background to it. So they're obviously saying that they are cognizant and recognize the unprecedented challenges and potential financial stress that the COVID-19 pandemic has created for both employers and members of funds, and that this could then inevitably have an impact on the deduction and or contribution of retirement savings, and the ability of employers to continue making payments as usual, or for members to be able to afford for such deductions to come from their salaries. So this information request 2 of 2020, I suppose to some extent then follows on to the FSCA communication 11 of 2020. You see, I said there's many of these things coming out, which we discussed at the previous webinar, and to which where we discussed the circumstances in which relief will be allowed. So the information request 2 of 2020 then asks funds to provide certain information in a template format, which is Annex A to the circular that was issued, and this has to be submitted to FSCA by the 15th of June 2020. Fiona is going to talk a little bit about the legal side of this for us later on. If we look at the actual template that was issued, which is Annex A, and then they also refer in the request to section C of this. So Annex A, at first glance, the information that is required doesn't seem to be so onerous and detailed, but once one starts considering the actual questions, you know, it starts off and you like sort of, yay, it's not too bad. It's yes, no type of questions. But if you read further on, they do ask for certain information. And this information, I think it's important for boards to understand. You're not going to be able to wait until the 14th of June to start putting the information together. Because once you actually start putting the information together, you see that it is very much something that you need to apply your mind to. So be aware of that. Start working on it now. So basically, in a nutshell, the information that they are asking for is for them to assess the actual impact that COVID-19 has had on the ability of employers and members to continue contributing to the fund. It deals with the process that was followed, that we discussed in the previous webinar also. But as we said right from the beginning, we said to funds, be aware, this cannot just be a let's quickly apply for a suspension, yes, no, approved, no worries. There needs to be a systematic and planned process that is followed by the funds. And here it is now coming out. FSCA is actually asking the fund, what approach did you take? What considerations did you make? Did you have discussions with members and employers? If you had discussions with the members or you had communications with them, tell us what it was. That is the type of information they are asking us for now. But we had a good discussion around it yesterday because with my legal colleagues that are always sharing very useful tips with us. Under section C, where they allow us then to make some general comments. If the purpose of this document or information gathering is for FSCA to understand the impact, then yes, let's share with them some useful information that we, or implications or cases that we came across in our consideration. If our fund came across some out-of-the-box issues, let's share that with FSCA so that they can understand the actual impact and the process followed by industry. So rather more information than too little information. And so yes, the information that you provide them with as a fund, it does not have to only be restricted to what they are asking for in the template. Under the section C, share with them something that you believe is worthwhile, that is outside of the scope of the questions that they have asked for. And I trust that explains it. I will now hand over to Fiona that will talk a bit more about it.
Thanks, Geraldine. All right, should we move on to the next slide, which has got the points that I am going to cover, excuse me, in discussing the law around this particular request for information. So one of the things is that the request for information is addressed to all registered funds, but obviously the context in which they're asking for this information is related to employers and members who may be suffering financial distress and not able to pay any or some of the contributions to the fund. So we have made inquiries with the FSCA as to whether, for example, unclaimed benefit funds are required to submit the request for information. And because those funds don't receive contributions, it's not necessary for unclaimed benefit funds. Also, they indicated that it's not necessary for a closing fund which has no active members in it to complete and submit this request for information because there are no more contributions being received into the fund. And the last query that we asked them about was if you have a fund that is in the process of closing down and has submitted a full Section 14, so a full Section 14 of all the existing members out of the fund, if that Section 14 has been approved, but you're still in the process of transferring the assets, then it's not required to complete the request. But if the Section 14 is not yet approved, then they would like you to complete the form. If some of the questions in the form are not applicable to your fund, then our suggestion is that you actually say that it's not applicable and why it's not applicable to your specific circumstances. And that will give the FSCA some context as to why you haven't actually completed a specific question. It may be because you're in the process of doing the full Section 14 out, and the members only have their balances in the fund, but they've started contributing to a new fund several months ago. So that kind of context and explanation will be useful for the FSCA when you're filling out the form. The other legal issue that I'd like to cover is the context in which this request is issued. So, we're all used to the Pension Funds Act, and sometimes we forget now that the FSCA is actually governed by the Financial Sector Regulation Act, which came in a couple of years ago and established the Twin Peaks regulation. So what that particular, you'll see there's references to 2 sections in the FSR Act in this request for information. It talks about a request for information in terms of Section 131. And if you don't complete the request for information, then the sanctions under Section 267 apply. So just for some context there, Section 131 is actually called information gathering, which obviously ties in exactly with what this request for information is. And the Act talks about a written notice by a regulator to any of the entities that it supervises for specified information. But it also talks about, and this goes to our point 3, is that the information that they are requesting must assist the regulator in performing their function. And I'll come back to that under point 3. So what is the function or the purpose for which the FSCA could be requesting this information? The sanction under 267, it refers to their under Section 267, that for every day which a fund does not submit the information, you are liable on conviction to a fine of up to 1,000 rands a day. So that is the penalty that is under Section 267 for not completing the request for information. And then the final point I just wanted to touch on in terms of the legal context, because funds may be asking, and as Geraldine's highlighted, it's not necessarily that easy potentially for some funds to gather this information. It's not just push one button and all the information spews out that you need to put into the request. It may take a little bit of time to pull the information together. So what would be the request or the purpose for the FSC asking for this information? Well, as I said, Section 131 talks about FSCA needing it to perform their functions. As we know, FSCA is a market conduct regulator. So I should imagine, and I've looked at what the FSR Act says, it talks about them being responsible for protecting members, assisting in maintaining financial stability, regulate and supervise retirement funds, and monitor fair outcomes for members. So I should imagine that they would take this information that is in the template and use it for a market conduct perspective, and also maybe to assess any requests that have been made to them for leniency or relief. That this will allow them to make a more informed decision as to what actions they may need to take going forward in respect of funds and the members. And so that was really the highlight of the legal context for the request for information. And I'll hand back over to Wayne. Thank you.
Thank you, Fiona and Geraldine. I just think in summary, just to confirm, and I think both of you would be able to confirm this for us, is you're going to ask your administrator to assist you, or your administration team to assist you with compiling the information. But ultimately, this is a document that should be signed off or reviewed at least by the Board of Trustees, the principal officer, before it's submitted to the authority.
That's correct, Wayne. That is correct. I can, that's 100% correct. So I think just maybe something that I should have mentioned earlier on is that this is, if one looks at the information template, it is on fund level. So if we're talking about an umbrella fund, it's an umbrella fund level. That the questions are posed to the board. The questions are not posed to participating employers. So participating employers don't need to complete the template. The questions posed to the board covers how they dealt with requests from employers and how they dealt with requests from members.
And just to confirm, the request is to funds, not to administrators.
Correct.
And I mean, it does make it clear, not that one wants to talk about that too much, that there is a sanction if you fail, like you mentioned.
Yeah, on conviction, there is a sanction. So it's, yeah, it would be interesting to see whether
sanction, but it's something.
it is there. It is. They do have that tool in their regulatory toolbox in the FSR Act. Yeah.
Thank you. And just a reminder to all participants, please, if you have any questions, ask them. We may not be able to address them here, but we are in the process, and the IRFA president will talk about it later, of compiling a document. So ask questions so that we also learn from you and understand what operational or technical questions there are that we may not have thought about in preparing for the presentation. Thank you. Thank you, Geraldine. Thank you, Fiona.
Thank you. Thanks, Wayne. Thanks, Fiona.
Thank you, both of you.
Thanks, President. I'm going to move on to our next set of speakers, Leanne van Wyk and Chantal Manson. Hopefully we can get them on screen quickly. Thank you. There we go.
There's Leanne.
There's Chantal. Good morning. We have prepared for this, so I'm not necessarily again going to read the questions on screen. Just a bit of context here for those of you who don't know the past situation. There've been two previous sessions. Well, one hosted by the IRFA on the 6th of May, and then there was a subsequent one hosted on the 14th, 15th of May, I can't remember, by the Pension Lawyers Association. And we've collaborated with the Pension Lawyers Association and collated the questions we received. Well, not myself, but the questions have been collated and themed together just to make it more accessible. And Leanne and Chantal are going to speak about the main themes that were identified from the questions posed. And again, this is obviously an evolving situation. Please ask questions so that we can, again, maybe not respond right here, but we'll be able to get back to you in due course. Thank you, Leanne. I'm going to hand over to you.
Thank you so much, Wayne, and good morning, everybody. I hope you are all warm at home during this really freezing cold snap. Yeah, so as Wayne said, we are going to try and deal with some of the questions that came up during the IRFA session and the PLA sessions, and just put some of those questions and answers to bed. But continue sending in your questions, because then we can continue answering them. So I'm going to deal with this first question here. Now, we know that this issue has been dealt with in all the sessions that have been offered on COVID-19 with respect to the legal issue. So we know this issue has been answered. We're aware of that. However, it is an ongoing issue. So what we want to do is simply deal with the latest issues on it and sort of give you more information around the legal and practical issues. So the question is really around, if you have an umbrella fund and your umbrella fund has general rules and special rules, is it enough to simply do a general rule, or do you have to do special rules for each participating employer who wants to either suspend or reduce contributions? Now we know that the FSCA's view on this was that special rules need to be done. We know also that, and I'm going to deal with this more at the end of my answer to this question, we know also that the FSCA's views can evolve on this, and we'll talk a little bit more about that towards the end. But if you look at this purely legal issues on this, there are a number of legal factors that point to the fact that if your general rules sufficiently deal with the reduction or the suspension of contributions, there is no need, legally speaking, for your special rules to deal with the same issue. I'm going to go through a couple of these so that you understand why we are saying what we are saying, because I think it is important when you give a view that you also give the reasoning or the rationale behind the view. So we know that if you look at Regulation 30 in brackets 2 and brackets G, which deals with what you have to have in your rules, that regulation specifically says that your rules have to deal with the calculation and payment of contributions, so that we know then that if you're doing a general rule, it has to at least deal with the calculation and payment of contributions. There is nothing in the legislation, so for example, Pension Funds Act, or in subordinate legislation like conduct standards, that specifically states that you have to have special rules and what you have to have in your special rules. So your special rules are not a separate thing to your general rules. They are simply chapters of your general rules. So there is nothing that says this is what must be in special rules and this is what must be in general rules. We know also that the appeal board looked at this, I think it was in 2017 appeal in front of them, and the FSB appeal board said specifically that special rules are no more than different chapters of the rules. So we know if we're looking at different chapters of the rules, that one chapter may change another chapter, one chapter may apply notwithstanding any of the other chapters. So we know, for example, that rules could be structured such that general rules can expressly provide that they apply notwithstanding special rules, as an example. But it depends on the wording and how your rules or your rule amendment is worded. In addition, general rules may expressly take precedence over special rules or take preference if there is a conflict between general rules and special rules. And this can be dealt with either already in your rules, in your general rules, or it could be dealt with in a rule amendment. So this is not contrary to the Pension Funds Act at all, and in fact it has been previously permitted in terms of rules that are already registered. In addition, general rules are not there to enable special rules. That may be the way that they are set up, and that may be the way they are specifically worded, but that can change, and that is not necessarily the case. The relationship between your general rules and your special rules, on the other hand, is entirely dependent on how that is worded in your rules. In addition, we need to consider the principle behind saying that when you want to suspend or reduce contributions, that this must be dealt with in your general rules as well as your special rules. Because what we are doing here is creating a precedent going forward. So as an example, will there be other issues now that we also have to deal with in general rules as well as special rules? Take an example of an umbrella fund that wanted to change its overall risk benefits for all participating employers in the fund. Does that now mean that they're going to have to do a general rule as well as amend every special rule? So the practices and the principles that we put into place now could have different effects going forward, and we need to remember that. So in addition to that, we need to in summary, understand that insisting on special rules, in addition to general rules, does not add anything to the rules. So if your general rules already adequately deal with the suspension or reduction of contribution, there is no need for your special rules to specifically allow for it. It doesn't add to the clarity with respect to your general rules in any way. In fact, it's unnecessary duplication. If you look at the practical considerations behind insisting on special rules as well as general rules, there are many practical considerations. So obviously we know that there are likely to be many more thousands of special rules that are going to have to be drafted, submitted, signed, etc. Going forward, because we know that this is not the end of financial distress for either employers or employees. In addition, that financial distress may change. So it may be that in 1 month they can contribute and in another month they can't. So this is going to lead, if you consider both those aspects, this is going to lead to many more special rule submissions going forward if special rules continue to be insisted upon. In addition, requiring special rules and simply the sheer volume of special rules means that we are having to gear up for this in terms of resources. So more people, more time, and this takes away from, for example, actually the implementation around reducing or suspending contributions. So we know that it's going to lead to operational difficulties and inefficiencies. In addition, we also need to remember that in this time of reduced contributions to a fund, it is also going to lead to increased cost by the fund as they are having to submit all these special rules. In addition to that, we know that special rules does not add to communication to members. So the fact that we don't do special rules doesn't mean that we have to communicate any less to members, and doesn't mean that that communication will be any less to members. So the IRF, of course, and I support ongoing, continued communication to members, and we don't believe that whether you have to do special rules or not impacts on that communication at all. Perhaps just to briefly mention on the supervision side that you know, if special rules are being required to be submitted simply so that the FSCA is aware of which employers are reducing or suspending contributions and which are not, I think that that is obviously not going to be an efficient mechanism. I think that the FSCA would be fully aware of that given their information request. However, I mean, there will be funds such as Type B umbrella funds, funds that are reducing pensionable salary, funds that are not submitting rule amendments because the existing rules allow for it. So in all those examples, the FSCA wouldn't necessarily be aware when an employer is reducing contributions anyway. Just the last point I want to make on this relates to guidance from the FSCA. So we know that the FSCA is intending to put out a guidance notice around COVID-19 and contribution issues and perhaps other issues, I'm not sure. I'm hoping that they are not waiting for the analysis of the information that comes out of the information request before they give guidance on some of these issues. I think that's certainly you know, it would be useful to have that information for some of the issues, but on this specific issue, I would be grateful, and I know the industry would be grateful for some type of guidance on whether or not the FSCA is still requiring umbrella funds to submit special rules. From what our members are saying to us, it seems to be that there is still some variation in how this is being dealt with. So I think that it is extremely difficult where this is being dealt with on a piecemeal basis by the FSCA. So it would be useful, I think, if the FSCA could look at this in a less piecemeal way and perhaps come out with at least the rationale behind their thinking. And I, for one, am always open to views and opinions evolving. I know mine do. So we would love to see how the FSCA is thinking about this now. We totally understand that umbrella fund rules and circumstances change from umbrella fund to umbrella fund, but certainly the overriding principles, I think, could be clarified and discussed and understood. Wayne, that's all from me.
Thank you, Leanne. Then Chantal, we'll move on to your, oh, I think I skipped a slide there. Thank you, over to you.
Thank you, and morning everyone. And I'd also just like to give a thanks to all my PLA colleagues who helped contribute and participated in the debates that we had in terms of some of the questions that emanated from the previous PLA webinar. So I'd like to give a thanks to my colleagues who did assist in us collating the responses that we're going to be discussing today. The first one that we picked up on is that there still seems to be some clarity required with unapproved risk premiums for employer-owned policies. So what I mean by unapproved risk policies, these are typically your unapproved group life, your income disability, your funeral policies, your critical illness policies, and these are employer-owned policies where the employer pays the premiums via the fund, and the fund is then used as a conduit to on-pay the premiums to the insurer. And in these instances, the fact that the fund is a conduit doesn't mean that these premiums are a fund liability. So where the employer is facing financial distress or is not in a position to continue paying these unapproved risk premiums, under no circumstances can the fund assets or the members' share of fund or individual reserve accounts be used to actually make payment towards these unapproved risk premiums. Because as I mentioned, these are not fund expenses, it's not operational costs of the fund. The fund is merely being used as a conduit for the flow of premiums from the employer via the fund to the insurer. So in these instances, unfortunately, the fund assets or members' share of funds cannot be used to continue paying these unapproved risk premiums if the employer is facing financial distress. And where employers are facing financial distress or unable to continue paying these unapproved risk premiums, they should be consulting their financial advisors or their benefit consultants to engage with the insurers to see if the insurers are perhaps putting in place a premium relief option on these type of policies, whether they're potentially going to be extending the grace periods in which the policyholder, being the employer, needs to make payment on these premiums. And another solution or possible scenario to consider is in instances where the employees aren't receiving salaries from the employers, but they are receiving payments from the UIF funds. In that instance, the employees can consent to the employer using a portion of that payment to pay these unapproved risk premiums, because this cover is absolutely critical during the current crisis that we're facing. And you don't want to find a situation where the employees are no longer having cover in place where you know, they are receiving such good premiums, or because it's underwritten on a group basis. You don't want to see these policies lapsing because they're not in a position to pay. So in these circumstances, the employers really should be discussing this with their brokers or as benefit consultants to see what position or what alternatives are out there for them, because you don't want the cover to lapse. And the FSCA has also encouraged insurers to engage with their policyholders to see what solution or assistance they can give to policyholders to try and ensure that these policies do not lapse. Okay, so just to reiterate, unapproved risk premiums for employer-owned policies cannot, you can't use fund assets or member share funds to pay these risk premiums to the insurer, because the fund is merely a conduit in this scenario. Thanks, Wayne. Then on to the next slide.
Chantal, I don't know if you can see the Q&A. I think just because it's you in the moment there.
Yeah.
On this topic, I don't know if you have access to the Q&A. Can you see it?
I can see the questions. So there's one about a beneficiary fund.
So just below that, there's a question from Nicole Delise, I think.
Perhaps I can help out with that, Wayne. The question about the 7D.
That's it, yes.
Okay, so Chantal, I'll start on this and then perhaps you can chip in as we go.
Yeah.
So we know that with respect to, and we've dealt with this question before, we know that with respect to rule amendments that are submitted to the FSCA around suspension or reduction of contributions, that the FSCA have on occasion come back to say, well, you may not deduct fund costs from fund credits or fund assets because it is contrary to 37D. And I think that is what this question is talking about. We have given a view on this before, and really our view is this, is that 37D is not there to say that deductions may not be made to benefits. In fact, it's a permissive section. So it talks about the fact that these are the deductions that are permissible. Right, so you can't say that because a deduction doesn't appear in 37D that it is therefore not permissible. As an example, this specific deduction from fund credits or fund assets of fund costs such as, for example, admin or consulting fees. Now there, we also know that if you look at the definition of your a minimum individual reserve as an example, we know that when calculating your fund credit, you're already allowed to deduct expenses. The calculation of it and that little formula that you're given already allows those expenses to be deducted. So I, for one, and this is just my own view, but I, for one, would say that 37D does not prohibit deductions of fund costs from fund assets or fund credits.
Yeah, and it's very specific for fund costs. So the formula in 14B refers to fund expenses, and a fund expense would include the administration fee, but a fund expense could never be extended to your unapproved risk premiums for employer-owned policies. So it needs, you know, the calculation in 14B is very explicit. It's fund expenses, and fund expenses is the only permitted deduction from the members' share of fund or the fund assets in that calculation. So I'm hoping that answers the question about the admin fee, because the admin fee is a fund expense and operational costs of the fund.
Thanks. I think that's a good guide for everyone. Moving on, I think, to the next theme, another difficult one.
All right. So there were quite a few questions around late payment interests, especially where there is potentially partial contributions or due to the employer facing financial distress, they don't actually pay the full amount or the full amount owing in terms of contributions. And in this instance, the question was posed, you know, does late payment interest apply to partial contributions? And the answer is yes. So section 13A7 is quite clear that it says that interest at the prescribed rate is payable on the amount of any contributions not transmitted into the fund's bank account. So late payment interest is definitely applicable where either the full contribution is not paid, or if there's non-payment, late payment, or short payments. Late payment interest will be calculated on the outstanding amount that's not paid across to the fund in terms of the contribution. And then leading on from the partial contributions, another point that we were debating and someone raised at the PLA conference was, I'm sorry, not conference, the webinar is, in the situation where a fund has submitted a rule amendment to either reduce or cease the contribution rates, but the rule amendment has not yet been registered, would late payment interest apply in this instance? So to give an example, if an employer requests to reduce the April contributions, the trustees then go take a resolution on the 5th of May, the rule amendment is submitted to the FSCA on the 6th of May, and the contributions for the month of April become due and payable on the 7th of May. In this instance, what happens in terms of late payment interest? So section 13A subsection 4 of the Pension Funds Act refers to a contribution which becomes payable at any time before the date of the resolution. And become payable, that is understood to mean that the become payable is the contributions for the month of April become payable on the 7th of May. So in this example, the contributions that were due for March and any prior months, those contributions were payable before the 5th of May, which is the resolution date taken by the trustees. So in this instance, the amendment cannot impact or affect the contributions that were due and payable for the March contributions and any prior months. So if the amendment is registered and only becomes effective after the contribution is payable, which is the 7th of May, the amendment then actually changes the amount that was due on the 7th of the May from the previous contribution to the reduced contribution rate. So the amendment from the date of registration actually alters the position that was in place prior to the date of the registration of the amendment. But it's very important to note that until the amendment is actually registered, the previous contribution rate remains owing. It's only upon the registration of the amendment that a different contribution rate becomes owing. So what we were debating is that this type of rule amendment should be seen to have a retroactive application. And what we mean by retroactive application is that the period of retroactivity is from the date of registration of the rule amendment to the 7th of May, which was the date on which the contributions were payable, and not to the date of resolution. So by giving this rule amendment a retroactive application, it means that the contribution rate position was changed. So prior to the registration of the rule amendment, let's say, for example, the contribution rate was 10, but then the rule amendment is wanting to reduce the contribution rate to 5%. So at the date of registration, even though the registration happens after the date in which the contributions were due, it retroactively changes the contribution rate to the rule amendment percentage being the 5%. So because the retroactive application of this, sorry, I'm just seeing all the notes pop up here. So because the retroactive application changes the position of the contribution rate to what it was prior to the rule amendment, it will also then mean that the late payment interest will also retroactively change. And the reason why we believe that or feel that these rule amendments should be seen as having retroactive application is that Section 13A4 must be envisaging a situation where the rule amendment is registered after the date in which the contributions become payable. So in this instance, the contributions were payable on the 7th of May, and the registration only happened after the 7th of May. We believe that the Section 13A4 should be applied with through the lens of being retroactively applicable, because otherwise there wouldn't be real use for Section 13A4 if the rule amendment has to be registered straight after the date of resolution, but before the contribution becomes payable, which is the 7th of May. So to summarize, upon the registration of the rule amendment, the underlying liability falls away, meaning that the reduced contribution rate replaces the previous contribution rate. And therefore sorry, I'm losing, with all the notes popping up, sorry. So just to summarize, upon the registration of the rule amendment, the underlying liability falls away, meaning that the reduced contribution rate becomes effective. So therefore, logically, the late payment interest that would have accrued on the higher contribution rate also falls away. But it's very important to note that this liability only falls away once the rule amendment has actually been registered. And that's me, Wayne. I see there are quite a few questions popping up, so maybe we need to address them now, if we've got time.
I just want to see. Yeah.
I've read the questions, Wayne, and I think that it might be useful if we rather issue a note on this. I don't know if everyone else is happy with that, but the questions are fairly technical, and I think that if we want to continue and answer the other questions we've been asked, we may need to just come back to this question at a later stage.
Yes, I agree. I think it's worthwhile, and I think we'll be able to get some notes out very quickly after this session, because a lot of work has gone into the preparation for the webinar. Yes, thank you. I agree, and they're good questions, and I think they're things that need to be addressed. Just easier to do it in writing, I think, well, for now, due to brevity. Not brevity, due to time constraints. We've literally got 9 minutes left. Is there anything else? You said you didn't have anything else you wanted to add at the moment, Chantel?
No, that's me.
Okay. Then, unfortunately, our next panelist, Nancy Andrews, isn't able to meet us, join us at this time. We have asked one of the other panelists to assist with this. Leanne from Vake's going to help us with this. Another very difficult topic, and one that's received a lot of attention in the media and a lot of thinking. I think this is a discussion that's happened even prior to COVID. I think COVID has, I don't know what, accelerated, emphasized, I'm not quite sure what the correct words are, but the access, Leanne, you've seen the questions. I think what I wanted to ask you, in my mind, and now we've raised the questions, is does the law allow for this? Can it happen?
Yeah. So thank you, Wayne. So we've all seen what's been suggested in the press, and we've seen various industry proposals around access to benefits. Now, we know that, for example, overseas, it has been allowed in, for example, the superannuation funds in Australia and others. Limited access has been allowed subject to fairly stringent conditions. However, South African conditions are obviously particular to us, and we would need to consider it as a country. We know that also this is more a national treasury issue than an FSCA issue. Obviously, the FSCA would give input on this, being the supervisory authority, but this is very much a national treasury government issue. And why I say that is that in most of the proposals that have been drafted or requests that have been made for access to benefits, it requires a legislative amendment. You know, so we can all come up with all questions and proposals and requests that we want, and many of those have been made, and I'll go through a couple of those at a high level. But the point is that I would say 90% of them actually involve a legislative amendment. So if you look at what you can do now, obviously, if you have a positive balance in the employer surplus account, you can look at a contribution holiday with respect to employer contributions. In addition, if you are retrenching staff, then you can look at accessing the employer surplus account. If you're not retrenching staff, it makes it much, for example, staff are laid off, so they're still employed but not being paid, then it becomes a lot more difficult to access employer surplus accounts with respect to the specific provisions of the Pension Funds Act, and you might be looking at exemption applications there. So that type of access is already provided for, and you can look at that. However, if you don't have a positive balance in your employer surplus account, you're very much limited to possibly, from what I can see, Section 19 of the Act, which currently allows loans to employers. So up to 5% funds can make the decision, up to 10% on application to the FSCA. But we need to be very careful there, because Section 19 also requires that those loans to employers are in the best interests of the fund. So the fund would need to be put together its own arguments around that, and perhaps take expert advice around that. I have said before that, and this is just my own view, that if you give a loan to employer, it could be done, for example, on the basis that your contract between the fund and the employer allows for it to be used for members. But again, you know, that is something that the fund would have to consider itself. I know other people have suggested loans to members. Again, that is something that will require legislative amendments, and people would have very varying views on whether or not that is a good idea for members and for the funds. So the other proposals that have, for example, been made is, you know, can you allow once-off withdrawal from a retirement annuity fund? Could you, for example, allow an additional withdrawal from PRES funds? Can we look at more lenient tax proposals? Can we look at a special sort of relief benefit being paid from funds? But all of those involve legislative amendments. So it would involve government considering that and discussing it within their various forums as to whether that would be a good idea. So I know also that the IRF is working on a possible submission around relief with respect to financially distressed employers and employees, and possibly access to benefits. But again, there's so many different views on it. We're gonna have to wait and see what comes out on that. So yes, I think that there is specific relief that you could offer now, but it is very limited. how you actually access benefits. There are a number of different ways you could skin the cat there, and we'll have to see what happens with respect to those requests and proposals that have been made to government.
Thank you. Thank you, Leanne. I know this is a really tough subject and a very emotive subject as well. But the reality is that we need to talk about it, we need to face it, and we need to decide how to deal with it. And for me, it's a situation of what can happen. You've told us about the can bits. And then the big question about what should happen is where all the debate is around. And I mean, it's a global debate. And again, there are certain South African particularities. The IRFA's view and work groups will be sharing ideas and the work we've done shortly. We have a couple of minutes, maybe one or two, if there are any additional questions. I know there was one question raised relating to probably more towards the questions that Fiona and Geraldine were dealing with. Fiona, I don't know if you saw the question. You saw the question? Okay, thank you.
Well, I did see one question about whether preservation funds and retirement annuity funds should complete the template A in the request for information. So to the best of my knowledge, those funds are not exempt from completing the template. So my suggestion would be that you don't ignore it. Because obviously there are the sanctions and the penalties. So I don't think you have the right to simply ignore the request for information. I think you would have two options. Either you write to the FSCA and say, for whatever reason you think it's not relevant, or you submit the form, and as I indicated earlier, you fill out the questions which are appropriate and relevant to your fund. And where you think the question is not relevant to your fund, then you indicate that in the request for information. But just to reiterate, I wouldn't ignore it. I would deal with it in one of those two ways.
I think that there was a question around beneficiary funds as well, I think related to.
Yeah, and I would deal with it the same way.
Same way,
yeah.
Same way.
Yeah.
And then there was another question related to a very technical question from Naim Esip. I don't know if you saw that there on, does the panel accept? I mean, we don't have to have a view. We can just mention it and say something we'll get back to everyone on. Does the panel accept that the FSCA's purpose of the information request is for the FSCA to assist with financial stability as defined in Section 4 of the Act? In other words, the FSCA can't use the information to find, for example, that trustees fail to comply with their fiduciary duties. I know we have touched on this as well in our conversations.
Yeah, so just briefly, in terms of the FSCA mandate in respect to financial stability, obviously part of the FSCA mandate in the Financial Sector Regulation Act is to make sure that retirement funds are capable of providing the benefits without interruption despite changes in economic circumstances. So obviously this, the information that is submitted may indicate to the FSCA that there are some financial situations or financial concerns that the fund had. I do think that the FSCA would have sufficient tools and mechanisms in the FSR Act to certainly ask further questions of that fund. I don't believe that they could make a finding just based on the template, but I do think in terms of administrative justice and the tools that they have in the FSR Act, that they could certainly ask more questions to ascertain what the situation is in that specific fund.
Okay, thank you. There's another very technical and complicated question from Rosemary Hunter. I don't know, we are close to the end of the session. I don't know if there's any of the panelists who feel they can give a quick answer. Obviously, this is something that needs to be considered. Thank you. Leanne, you.
Yeah, the question from Rose, I think is interesting, and we have seen, Rose, the specific view before in your articles, so thank you. I think that you're right with respect to the definition of pension fund organization, specifically with reference to the type of benefits that a friendly society may provide, and the fact that that could be included within the definition of pension fund organization. So I think that is correct. But again, for me, it is one of the ways to skin the cat. You know, I think that's a specific benefit. Again, it requires a legislative amendment, and it requires government to consider it. So as I said, I think there are many ways to skin the cat. I think some will be better than others with the effect that they have on members. But again, a legislative requirement, as you pointed out, would be necessary.
Thank you. I can't see any other questions at the moment. Our time is up. I would like to invite the IRFA president, let me just, to close the meeting for us. Just gonna ask to get the Enos's video up for us. Thank you, Enos. Can you proceed, please?
Thank you, Wayne. Let me start by thanking our esteemed panelists for their input and insight in responding to the questions that we have received. Thank you very much to Leanne van Wyk, Geraldine Fowler, Fiona Rollason, Chantal Manson. Thank you very much for the wonderful job that you have done. I also want to thank our moderator, Wayne. Thank you very much for facilitating the process. And also thank all our participants who took part in our webinar this morning. I also want you to note that we have received quite a number of questions, and we are busy incorporating them into some kind of a presentation that will be circulated to all of you. Thank you very much to our participants as well. A series of documents, of course, dealing with questions that are raised in our previous webinar as well, will be distributed to all the participants. And we thank you for continued engagement, and also thank our stakeholders for sharing the information that they had. And we also want to continue to share this information as it becomes available to all of you as participants. You can still send further questions if you still have your questions to our email. As you know, our email is reception@irf.org.za. reception@irf.org.za. Thank you very much to all, more especially our participants. Thank you very much to our esteemed panelists. As already mentioned, you've made the conversation quite exciting. Thank you very much.
Thank you, and goodbye.